a large share of filers who were itemizers are now shifted to the standard deduction.
Yeah.
Right.
And under that shift, you lose the marginal incentive to make a charitable contribution. Now, whether or not they stop giving is an open question.
Right.
See.
Yeah, yeah.
But if somebody's deductions exceeds the 24,000 for joint or the 12,000 for single, whether that's home mortgage interest and charitable contributions, then that marginal incentive still exists. But for the folks who moved from the itemized to the standard, the incentive goes away. Now, that's the federal incentive.
Right.
Just because you can itemize at the federal level or not, and then you can itemize at the state level or not, and you don't have to do the same. So the incentive for the folks that have become standard filers at the federal level, they may very well be, and they're still likely to be itemizers at the state level, so they still have an incentive. It's just the state level only, not the federal
A
incentive.
lot
Okay.
smaller.
Yeah.
Right, at 9 or 9%.
Right. And then if I may,
Please.
thank you, Mr. Chair. On the limitation applying to specific service businesses, do you know of, or can you think of ones that are not? Because it's only applied to specific service businesses, could you give me an example of ones that are not, that it does not apply to?
Well, some of these don't apply to technical instruments like REITs, for example, and estates and trusts. But in terms of what you would think of as a business, I believe engineering and architectural were exempted from this limitation. And again, it's a limitation only if the income is above those amounts. So this does, and one of the final slides just touches, and I think OEA is going to touch on this a little bit later. It's the incentive this creates to recharacterize your income. Maybe I'm a pass-through entity right now, and one that is also limited is performing arts. So if I'm my own LLC and I'm earning money from a variety of revenue streams, and a lot of it under a prior law was my performing arts income, and it was what it was. I didn't have any incentive to change that. And my income is $500,000, but I also have income from other pots. If I can somehow change the nature of my income to one of the other ones, I now have an incentive to do so, because then I escape the limitation. And those are some of the responses that tax lawyers and tax CPAs or CPAs are starting to look at.